So I started investing. Disclaimer, if I say anything in this video that is incorrect, please correct me. I am just learning and I'm new and I'm just, I'm out here having a good time. So welcome back to another video. My name is Carson Arnett and today we're going to talk about making that fat dough. Okay, you know what I mean? This is literally $35 and that's pretty much all I own. Now, investing can sound really daunting, and those of you that want to invest may be a little intimidated and you may become discouraged because there's a lot of lingo and it seems complicated, but it's really not. So hopefully today you can pick the brain of somebody who just started investing and knows somewhat what he's talking about, but not really a lot. But you know what? I'm here, and hopefully just through me talking about it, I can learn more myself. So spoiler alert, if you're thinking about investing and deciding whether or not it's a good idea, it's a good idea. So I'm about to show you I'm about to walk through how to get started, and I'm gonna show you what my account looks like. And before I show you, don't expect anything crazy. I don't have any money. I am a college student that makes YouTube videos, and that's what it is. So please don't make fun of me. Let's get into it. So anyways, this is what my account looks like. I only have $282 invested, and that's just how much money I have. You saw how much cash I just threw at the camera. That was it. And with this, that's it. But anyways, my portfolio isn't super diverse. When I invested before, I would throw my money in stuff like Twitter, Tesla, Apple, Microsoft, Starbucks, all these high grossing stocks here. But I want to go over what I'm invested in and why real quickly for you guys that are just kind of new to this and want to know what you should be investing in from the start. So this right here is the Vanguard S&P 500 ETF, or better known as its ticker symbol VOO. Anyways, you may have heard on the news or maybe in like the newspaper or whatever of the S&P 500, which stands for Standard & Poor's 500, which is the top 500 companies in the United States that are traded, and it's just kind of a mash of all these companies. So what I have right here isn't actually the S&P 500. This is a much cheaper way of getting exposure to the stock market without actually dropping the, I think, close to $3,000 that the S&P 500 costs. So this here is actually the ETF, which basically tracks the price movement of the actual S&P 500. So typically it's going to mimic the S&P 500 because it tracks the movement. So you can start investing into this with just $1, or you can buy an entire share, which right now it's $265. The reason I'm invested in this is, for one, I can't buy into the much larger S&P 500, but the S&P 500 ETF works kind of the same, except you don't actually own parts of these companies as you would in the S&P 500. Now, when it comes to investing, I'm not much of a risk taker. I like to buy and hold my stocks. So I buy stocks that are going to statistically grow over time based off of data from the past. So you can see here the S&P 500, since it was initially introduced in 1980, or at least tracked. I don't know when it was introduced, but typically it uptrends over time as the economy gets better. As of recently, you can see it's dipped because of the coronavirus, and that just happens, but the economy always recovers. Now, I'm probably not doing a great job explaining this. I can recommend a few videos down below in the description that will hopefully explain it better than I can. So anyways, S&P 500 is the place to be, and if you can't afford the entire S&P 500, you can buy the ETF that just tracks it, and it's just a little more affordable, but you can still get the same gains, which is typically 7 to 8% per year. So to add a little icing on top of the cake, this actually offers a 2% dividend yield. And so what dividends are is you basically get paid just to invest and hold on to stocks. So you get paid quarterly, so you'll get 2% of what you have invested 4 times a year. So that's just free money just for holding on to stocks. And most stocks do have a dividend. The S&P 500 just so happens to be 2%, but if you go over to like Ford, nope, that's a different Ford, which is just F, their dividend is 12%. So if you have $100 invested into Ford, you'll get paid $12 4 times a year just for having the stock. Stocks are crazy. But if we look at more like Tesla, I can't type, they don't have a dividend yield. So there are some stocks that don't offer that. So look at more like Apple. I think Apple does for sure. Yeah, so Apple has a really small dividend yield, actually less than what you get in the S&P 500 of 1% there. So, you know, you can do your research and see what stocks actually offer the most dividends. And it's not a bad idea just to invest into those stocks just for the dividend yields. There's people that live off of basically just dividend yields. So it doesn't matter if the stock goes up or down, as long as you're holding money into that company, they will pay you quarterly a percentage of what you hold. So it's just kind of a good, secure way of knowing that you're gonna get a paycheck 4 times a year from a company. But yeah, that's basically my really small, very small portfolio. It's growing. I will probably show you updates. That's basically the rundown of my portfolio. I love Robinhood. They make it really easy for people that are trying to learn and getting to investing. They have news feeds, and often if you go on popular stocks like this, they'll show more news about how the stock's affected and other things like that. But they make it really simple and easy. You just set up your account, you do your social security number, all that stuff. You take a picture of your license and you send it to them. And within a few days, they'll open up your account and you can start investing. So if you want to open up your account today and start investing and learning with me, I have a link down in the description. I'd really appreciate it if you go and click it. So even though I don't have a lot of money to show for it within the market, investing is a safe and secure way, when done properly, to have your money work for you. And potentially this can create another revenue stream for yourself, and you can grow your money even further through dividends or just general market growth. Because if you have it sitting in a savings account, it might, generate a little bit of interest, but really not that much. And for a bonus, if you have enough to buy into the actual S&P 500, you can throw your money into something called a Roth IRA. And within a Roth IRA, your money actually gains compound interest. So that total in your Roth IRA will just grow based off your investments, and that total will then create money, which creates money, which creates more money, which creates more money, because that's how compound interest works. Not to mention, if you throw it into a Roth IRA, that money will not be taxed. So any gains that you make in the market and it's running through that Roth IRA, you won't be taxed for that income. And if you decide to contribute some of your own money into that Roth IRA, which you should be doing, you shouldn't just be relying mainly on your market growth. That money was already pre-taxed because it probably comes from your paycheck. So you'll be throwing that into the Roth IRA, and yeah, it's like a vault of untaxable money that grows. It's crazy. So that was my 2 cents on what it's like to be a learning investor, beginning investor. It's really not all that complicated. If you guys have any questions whatsoever, I can try to answer them down in the comments below. If not, I'm actually going to post a few helpful videos in the description below. Remember to like and subscribe down below. And like I said, leave a comment if you have any questions or if you need any video recommendations. There's probably other people that can explain all of this better than I can. I'm gonna head on out of here. Me and Mr. Krabs about to go make some dough. So, I'll catch you later.